Hey guys, Daniel here with Value Investing with Daniel. Thank you for tuning into this video. In this video, I wanted to go over Alimentation Couche-Tard, ATD stock. This company, or this video was requested by one of my subscribers, so I thought I'd just get right into it and go over my thoughts on this company and this company as an investment. So at the current price, ATD is not interesting to me. I think it's important to remember our position as retail investors. If I was an institutional in charge of managing an institution's, let's say, funds, and I had tens of billions of dollars to deploy, definitely ATD would be one of the companies that would be on my radar on a fairly, I would say, permanent basis. So I would be looking for an opportunity to buy into ATD at a fair valuation. Managing, a portfolio as a retail investor, a portfolio that is not tens of billions of dollars, I have the privilege of not being required to deploy capital into situations that I believe are not 100% perfect and optimal. What do I mean? I will only invest in a company if it's so obviously cheap to me that it hits me over the head with a 2x4 and I don't have to do any higher level mathematics whatsoever to determine it's a good investment. Let's use ATD as an example. So just going over some basic numbers, right? Just what's available on Yahoo Finance. $80 billion market cap, less than 1% dividend yield, earnings power of about $3 billion per year. We can check free cash flow and just come up with some rough numbers. Again, let's just say $3.2 billion a year in free cash flow. So $3.2 billion a year. In terms of earnings power, looking at about a $30 billion a year earnings power value, maybe 45 billion, maybe 60 billion if you really believe that it has great growth prospects and is really secure and entrenched in its industry, which I think it's fair to say it's a secure enough company. But market cap wise, we're looking at a company that's trading at about 80 billion. I would buy ATD if the market cap was 20 billion. Meaning the price from the current price would have to fall probably close to 75% for me to consider buying. And the question is why? Well, the reason why I would only consider it at that price is because I have the choice to choose where I put my investments into, and I'm only willing to invest in something if it's so obviously cheap to me that I don't have to justify it to myself at all. So as soon as I start justifying, well, it's a great company, it has so-and-so prospects, this and that, you start to get away from the fact that maybe it's not as cheap as you should really be looking, especially when we're talking about companies with a $80 billion market cap trading at the end of the highest price in terms of their 52-week range, the highest price over the course of the last 5 years, and highest price in history for the company. Everything is telling me that it's not dirt cheap, and so I'm just simply not interested. Now, is it a good company? Yes. Is it a fair price? I can't say that the price is egregious. So it's not that it's a bad price. It's just that it's a bad price for me. And the reason for that is because, I feel like your growth is only going to come from the increase. You're only going to make money basically from a couple of sources. One is going to be an increase in price. Well, if the price is going to increase, you need some driver for that. One, has to be undervalued to begin with, or two, there has to be growth that's generated from within the business. This company already has something like 14,000 stores, 14,400 locations. You have to ask yourself, at what rate is it going to be able to compound its earnings in the future? So if there's not substantial undervaluation to the point that it's so dirt cheap, you're just shocked, then probably it's too close to call. And that's the case, I think, with ATD at the current price. Now, that's not to say it can't go up. That's not to say you can't make money. And that's not to say it can't continue to grow or be a good long-term hold. But in terms of my perspective, from my opinion and my position, I would not be interested in ATD unless it was selling at about $20 a share. Maybe 25, possibly 30. So it would have to fall over 50% for me to be interested. And the reason for that, like I say, is simple. It's up to me where I choose to put my money, and I'm only going to put into stocks that I think are so egregiously underpriced that it just basically completely shocked me. And so unless I'm shocked, I'm not interested basically at this point. So and that's my position on it. So it's a good company from what I can tell. I think it'll be doing fine 10 years from now, probably. But I think there are better opportunities at the current price when you're working with less than a few $1 billion. I mean, like I say, if I was managing a $10 billion fund or a $100 billion fund, ATD would be on my radar on a permanent basis, and anytime it fell below 15 times earnings or whatever, I would probably buy more. But from the perspective of the position that as retail investors we find ourselves in now, there's definitely better opportunities than a $80 billion fair price consumer staple company. So that's my perspective on it. I hope you found the video informative. Again, it's not cheap, but it's not overpriced. It's up to you if you want to put your money into this or if you can find better opportunities out there. And as always do your due diligence, read the 10Ks, 10Qs, and see what the company's doing and what their plans are. But on a first glance, look at the company. It's not cheap. It's not so cheap that I'm shocked. And to me, if I'm not shocked, then I'm not interested because there's going to be better opportunities out there, especially in the nano and micro cap space where we should be paying more attention to if we're looking to compound capital at high rates of return. So that's the video. I hope you enjoyed it. Thanks.